The Reserve Bank hikes interest rates, sending shares tumbling and the Aussie dollar higher. Qantas picks its chief financial officer to replace the outgoing Alan Joyce. And the rental crisis in Australia hits record levels. It's Wednesday, the 3rd of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. I'm very excited. Massive news, 24 hours.
Hasn't it just been huge? I mean, from the Reserve Bank with a bit of a surprise rate hike through to the biggest kind of CEO gig in the country.
Yeah.
Like a little bit of everything for the last 24 hours.
Yeah, it's great. Let's jump into it.
Yeah, absolutely. I'll quickly mention, Sean, we've got an interview coming up after the show with Christy Nicholas, who is the Managing Director of Mum Power.
Yes, just as the name suggests, it's all about marketing to mums. Now, they're a very powerful and important cohort, but difficult to reach. And Christy's an expert at helping businesses reach mums who make a lot of the buying decisions in households, particularly the smaller buying decisions. So we talked to her all about that. It's a great chat.
Yeah, it sure is. The main story this morning, Sean, one of many big stories today, the Reserve Bank lifted interest rates by 25 basis points yesterday, surprising market watchers, triggering a tumble in equities, a jump in the Aussie dollar, and, unfortunately, adding more to home loan repayments.
It was the 11th increase in interest rates in 12 meetings and takes the benchmark cash rate to 3.85%, an 11-year high. The central bank board said that although inflation has passed its peak, it remains too high and will take some time to be brought back into the Reserve Bank's target range of 2 to 3%. It doesn't think that's going to happen till mid-2025. Now, the bank is pretty relaxed about goods prices, TVs, clothing, that sort of thing. It isn't comfortable about the price of services or about rising labour costs without productivity growth. Not jumping on inflation now will lead to much worse consequences in the future, the bank argues.
So are there more rate rises coming then?
Well, the Reserve Bank board said some further tightening might be required, but it depends on how things progress from here. Obviously, the bank is watching inflation closely, but it's also focused on the labour market. It's focused on household spending, which is definitely slowing, and it's focused on developments in the global economy. The risk, which some economists are now talking about, is that the Reserve Bank goes too hard and triggers a recession. Let's hope that doesn't happen. In fact, some economists came out yesterday and said rates are now too high. We will have a recession, and so rates will start falling later in the year. Still some way off, but that's the talk that's around the place.
Let's go straight to the hip pocket now, Sean. What's it mean for mortgage repayments?
Well, on a $750,000 loan over 25 years, it's about $119 a month more. On a $1 million loan, it's about $158 a month more. If you include all the rate hikes since they started at the beginning of May last year, repayments for loans of this size, that $750,000 to $1 million size, are up between, it depends on what rates you're paying, etc., but somewhere between $1,500 and $2,000 a month. That is significant. I think it'll be really interesting to see how auction results go this weekend, given the pickup in recent months. Just how much of an impact will the rate rise have? Be interesting to see.
There's a lot in this, Sean, and it was really a bit of a surprise when this came through yesterday afternoon. What's your take on it? What does this all mean?
Well, we know the Reserve Bank is close to ending the rate rising cycle. Yesterday's increase, while not forecast, isn't really a surprise. You can't blame the central bank for being overly wary of inflation and inflation expectations. You'd rather them overdo it than underdo it, basically. And I'm sure most economists out there won't care too much about the rate rise. But we need to see inflation to continue falling. We need to see some loosening in the labour market. And Michael, more important than anything, over the next week, we need to see a sensible, fiscally responsible budget from the government. That is all important. If the government goes on a spending spree, we will see further rate hikes. If it doesn't, well, we might be at the top of the rate cycle.
Puts a fair bit of pressure on the Treasurer for next Tuesday night, Sean. Now, clearly share traders did not like the news yesterday afternoon.
No, they didn't. Higher interest rates aren't good for earnings, and the 2:30 p.m. announcement triggered a very sharp sell-off in the S&P ASX 200. By the end of the day, it was off nearly 1% to finish at 7,267 points. Real estate stocks, which are particularly sensitive to interest rates because they carry so much debt, were hardest hit, with the Real Estate Investment Trust Index down more than 2%. Telcos, energy, industrial stocks, they were all hard hit too, but they were selling across the bourse. Only one top 20 stock closed higher, and that was Newcrest Mining. Among the very large companies, Telstra led the way down, dropping 2.3%. Transurban was off 2.1%. The big four banks were relative outperformers. Now, they all ended lower, but higher rates actually helps profit margins, so they outperformed most other companies. Best on the day among the large caps was Cleanaway Waste, which upgraded its earnings forecast. Computershare was worse, down 5%. Michael, away from equities, bond yields, which reflect interest rate expectations, jumped after the Reserve Bank announcement. 3-year bond yields added 16 basis points to 3.2%. What that means is that big investors think interest rates will be staying higher for longer.
Sean, we mentioned yesterday, and actually a few times now, that markets had priced in very little chance of a rate hike yesterday afternoon. So was that just perhaps them being overconfident then? Because as you say, it may not necessarily have been such a great surprise that the Reserve Bank was keen to kind of stamp out inflation as much as possible. So was it just financial markets kind of being overly optimistic based on kind of what we saw last week on the inflation data?
A month ago, they priced in no rate hike and they got it right, whereas most market economists thought the Reserve Bank would lift rates. This time around, they got it wrong. I don't know whether it's overly optimistic. The thing about following the bond market is that's real money, and so it's actually a very good predictor of what's going to happen. Yesterday, they just got it wrong, basically. That's kind of the bottom line. There's not really a huge cost to it because people are buying and selling in the same market. So obviously when the Reserve Bank makes a decision, we think rates are going to be higher for longer, yields jump. So some people would have thought that would have happened beforehand and potentially have sold off already. But there's always a buyer and a seller in this market. And so it's kind of the opportunity cost lost rather than anything else.
This is why I love doing this podcast with you, Sean. I love the context around it.
Well, basically, there's always a buyer and seller in every market. So there's always a winner and a loser. And we've got to have to keep that in mind.
Okay. Well, look, I also mentioned earlier that the Aussie dollar jumped. What's it trading at the moment?
Well, after the announcement, it headed towards 67 US cents, up almost 1 cent. In the short term, higher interest rates supports the currency, so it's at that level at the moment. Otherwise, Michael, in international markets, commodities were broadly flat. Bitcoin's fallen a bit. It's back under 28,000 US dollars a unit. But really, yesterday was all about the Reserve Bank lifting interest rates and everything that happened from there. Huge day.
Yeah, huge day. And we're just getting started, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the board of Qantas has picked Vanessa Hudson, the current chief financial officer, to take over from Alan Joyce as CEO of the national carrier from November. This is big news.
Sure is. Hudson is a 28-year veteran of Qantas and one of the first female CEOs in the aviation world. She beat out about 40 other candidates, including the other lead internal person, which was Olivia Worth. Hudson is perhaps best known for successfully leading the airline's finances through the COVID pandemic. I think it's fair to say she did a great job. In a press conference yesterday, she said it was an absolute honour to get the job. She said she understood that the customer experience late last year wasn't what it should have been, and the carriers spent about $200 million fixing things up. She also wants to have a constructive relationship with the unions. Joyce said it was time to go after 15 years and said the moment was bittersweet. No doubt. As you mentioned at the top of the show, this is probably the highest profile CEO job in the country. Good luck to her. Mind you, didn't start that well. Qantas' share price ended yesterday down 2.7%.
Sean, it probably says something about the very good succession planning at Qantas that there were 40 kind of candidates for the job. And in the end, it really kind of came down to almost 2 internal candidates. And one of them has been chosen to be elevated to the top job. I think that's pretty remarkable.
Yeah, I totally agree. In fact, Alan Joyce has been in the job for 15 years. The guy before him, Jeff Dixon, was there for 8 years. Vanessa Hudson's been there for 28 years, so she's been there throughout that whole period. I really like companies that can groom internal talent. And yesterday, Richard Goyder, the chair, was very clear and said, basically came down to two people, and they're the two internal people, Hudson and Olivia Worth. They're trying very hard to keep Olivia Worth at the carrier. She's an extremely talented person. For Qantas' sake, hopefully she stays, but good on Vanessa Hudson.
Yeah, absolutely. Now, this is an interesting one, Sean. Australia is going to phase out vaping, with Health Minister Mark Butler saying the rise of vaping, particularly among young Australians, threatens to undo decades of public health progress on smoking.
He said vaping has now become the number one behavioural issue in high schools and is becoming widespread in primary schools. And he pointed out that vapes contain more than 200 chemicals that don't belong in the lungs. Now, vaping was supposed to be a way for smokers to quit. That's how it was sold initially. Instead, it's become a recreational product. 1 in 6 teenagers between the ages of 14 and 17 have vaped. 1 in 4 between the ages of 18 and 24.
Don't you find it off-putting, Sean, as well? Because it's just such a huge cloud of kind of vapor that comes out when people kind of are vaping.
Yeah.
It looks like they've caught on fire.
Their heads are on fire.
Yeah, you just see this car driving along and just suddenly this giant puff of white smoke just comes out the window. Like, oh my God, I need the fire extinguisher. No, it's just somebody vaping. You know what? I think it's good news that they're going to phase it out, just because I find that really disconcerting.
Yeah. I mean, to be honest, I have never tried a vape in my life for no reason, not because I'm for or against it. It's just hasn't, it's not something that interests me. But like all the research is not positive, that's for sure.
No, I can't. That's a pretty remarkable stat. More than 200 chemicals that don't belong in the lungs.
Yeah, that's not good.
It puts it pretty plainly, don't you think?
Yeah. Look, Mark Butler also yesterday said that the tax on tobacco will be increased by 5% a year for 3 years, starting from September 1. That will raise about $3.3 billion over the next 4 years. And loose leaf and roll your own tobacco products will soon be taxed in the same way as cigarettes. At the moment, they're taxed less. So in about 4 years' time, apparently a pack of 25 cigarettes is going to cost around $50. I'm not a smoker, but geez, that seems like a lot of money to be spending if you're a pack a day man.
Oh, absolutely. And it's actually a good lead into budget news, Sean,
yes.
Because it is...
Nice segue.
Thank you. I'm quite proud of that. It is less than a week to go before Treasurer Jim Chalmers announces his second budget.
Yes, yesterday he announced some changes to superannuation payments. Rather than being paid quarterly, super contributions will be paid alongside wages. So if you get paid monthly, your super will be paid monthly or fortnightly or whatever. It will reduce the number of people who aren't paid super, the Treasurer says. Now, workers lose billions of dollars each year in unpaid super. Chalmers was also asked if there'd be an increase in job seeker payments. He didn't really deny that one. Australian Defence Force personnel will be given $400 million for retention bonuses to help slow the thousands of people leaving the armed forces. Permanent ADF members will be eligible to receive a $50,000 bonus near the end of their initial mandatory period of service if they commit for another 3 years. 3,400 personnel will be able to benefit within the first 3 years under the plan. And also, Michael, the government will introduce a new messaging system to better prepare people for natural disasters. The National Messaging System will force messages with natural disaster warnings and information to flash up on phone screens in multiple languages, regardless of the recipient's mobile service provider.
Sean, it's just dawned on me why it feels like it's been so little time since the last budget, because it wasn't in May.
It was so little time.
It was in October, wasn't it? Because it was
October last year, because the government was elected in May, and they held a
Yes. What you heard just then, Sean, was an epiphany.
Oh, epiphany. Is that what this sounds like?
Yeah. Sounds painful, doesn't it? And I assure you it was. Annual rents. Sean, we mentioned this one at the top of the show. Rents across the country have risen by 10% over the past year, while in the capital cities they are up 12%. That's a new record.
We hear plenty about rising rents, and these CoreLogic figures show just how much higher rents are. Add in petrol prices, the cost of energy, food inflation. There are many people out there who are doing it very, very tough. Rents are being driven higher by the mismatch of supply and demand. A surge in migrants and international students has pushed up demand. That's fair enough. But capital city rental listings are 20%, or in fact 21% below the level recorded 12 months ago. They're about 40% under the 5-year average. Not helping are near record low vacancy rates in most capital cities, the exceptions being Hobart and Canberra. Now, last month, Melbourne rent recorded the biggest rise across the country, followed by Sydney and Perth. As a result of that rise, Melbourne has lost the mantle as the most affordable rental market. Average prices there are $535 per week. That's above Adelaide's $534 per week. Sydney is the least affordable at $711 per week. It's a lot of money.
That is a huge gap, even between Melbourne and Sydney.
Yeah, absolutely.
Sean, the competition watchdog has rejected the NBN's proposal for higher prices on some plans and cheaper on others, and asked for new ideas to make broadband more affordable and effective.
Surely that's a good thing, wouldn't you think?
New ideas. Is that something you can really just ask for? Just come back with something different. Surprise us.
The Australian Competition and Consumer Commission rejected what's known as the Special Access Undertaking from the NBN. Basically, it's the framework that allows the NBN to be commercially viable and provides customers with affordable access to the broadband network. The NBN proposal would have increased prices on slower, mass market internet plans, but dropped the cost of faster and less utilised speeds. The big telcos like Telstra and Optus would have had to push through price rises on the most popular 50 megabits per second plans. Now, the ACCC said the proposed SAU would not have done enough to address consumer concerns about poor NBN service quality or take inefficient costs out of the retail supply chain and promote retail competition.
The NBN's clearly kind of having trouble pushing through price rises, Sean. Not so some of the streaming services. Amazon pushed up prices by 40%, just a casual little jump there.
Yes, well, the Amazon Prime subscription price has been $6.99 a month for 5 years, so they probably are allowed to increase it, and they've done that to $9.99 a month. That's still cheaper than Disney's One Pass. That's $14.99 a month. Netflix, that's at $16.99, but it's still a fair hike. It doesn't actually seem to matter, though, because Australians love streaming. So while 1.1 million Aussies cancelled streaming plans in the first quarter of this year, 1.34 million signed up to a new one. 62% of households have at least one streaming service, according to research group Qantas. Last quarter, the HBO series The Last of Us was most popular, driving subscriptions for binge. Can't say I've seen that one, Michael. Have you?
No, I haven't. I've heard lots about it. Everybody was talking about it. I feel like I'm the only person who hasn't seen it, but clearly I'm not. You are with me on that.
Yeah. Prime was the biggest winner during the quarter with more new subscribers, followed by Binge, Paramount and Stan. Netflix came in at number 8, but was the streaming service that lost the least number of watches during the quarter. Of course, it has the largest market share in the country.
How about this one, Sean? People are increasingly heading to the pub, not to drink, but to eat. I don't know about you, but there's something just vaguely un-Australian about this.
I'm with you. Now, this is the view of Steve Donoghue, boss of Endeavour Group. He should know because his company owns 353 hotels, including 12,000 poker machines, 264 Dan Murphy outlets, and 1,437 BWS stores. Donoghue said sales in pubs for the 3 months to the beginning of this month jumped close to 20% compared to a year ago. He said a desire to socialise post-COVID was the big driver, with more focus on eating than drinking. That is un-Australian, absolutely.
Any desire to socialise sounds un-Australian to me. Or just maybe not un-Australian, maybe just unfamiliar. Please, go on.
Yeah. Another trend he's noticed is more people driving to bottle shops and liquor outlets to buy alcohol rather than buying online. In the gaming side of the business, turnover has returned to its pre-pandemic share, but clearly the schnitty is winning over the, Tui's new, 4X Gold, VB, whatever.
I've never been a pub schnitty fan. I just
Oh, really?
more go for the burger or something along those lines.
No. You're having a go at me for not particularly liking meat pies.
Oh, I forgot about that.
Chicken schnitty.
Yeah, I mean, at least I will gladly eat one. You are violently opposed to meat pies, hot dogs, hot chips, and a bunch of other things that make Australia great.
I'm violently opposed to hot dogs. I agree with that. Not meat pies. It's just not like my preferred option. A chicken schnitzel, though, Michael, is actually probably the epicenter of cuisine in Australia because you get them everywhere. I mean, you judge a pub by its chicken schnitty, let's face it.
I don't like this. I don't like the way this has suddenly turned on me, because yesterday I was successfully painting you as basically Sean, un-Australian Aylmer, and now you've kind of spun it around. So I'm going to move on very quickly before I get dragged down with you.
Right.
One last one, Sean, before we get to international news, because we are running a little bit behind time. Woolworths has posted an 8% jump in sales during the March quarter thanks to improving supply of products.
Australia's biggest grocer said that total sales across the business was $16.3 billion, thanks to a big jump in its food business. Now, that accounts for about 3/4 of total turnover. Woolies X, which includes the loyalty program, that had a pretty good quarter. So too did Countdown, the New Zealand food business. The group said that private label items sales grew sharply as shoppers continue to trade down, looking for better value as a result of household budget pressure. Chief Executive Officer Brad Banducci said he is seeing signs of overall moderation in inflation in food, though there are still pockets of sharply rising prices.
Sean, in international news, the US government risks running out of money as soon as June 1. This is a warning from Treasury Secretary Janet Yellen in a letter to congressional leaders.
Yes, so President Joe Biden has invited Republican Speaker of the House Kevin McCarthy to the White House next week. Now, this is amid growing concerns that Washington is heading towards a debt ceiling crisis. According to the Financial Times, Yellen's letter said, and I quote, "After reviewing recent federal tax receipts, our best estimate is that we'll be unable to continue to satisfy all of our government's obligations by early June and potentially as early as June 1 if Congress does not raise or suspend the debt limit before that time." Well, I mean, debates over raising the debt ceiling, which is a legal limit on federal borrowing, have become a perennial issue in Washington. But there's a big standoff at the moment between the Biden administration and Republicans on Capitol Hill. That's really raised fear that the government is actually heading towards an unprecedented default, hence the meeting next week between Kevin McCarthy and Joe Biden.
All right, one last one, Sean. Writers for some of the most popular shows on TV are walking off the job, striking for higher pay amid rapid changes in the way people watch their programs and films.
The Writers Guild of America, which represents more than 11,500 Hollywood scribes, said members voted overwhelmingly to authorise the walkout last month, according to Bloomberg. As a result, work on late-night talk shows, soap operas, things like that, could pretty much halt immediately. Now, it depends how long this work stoppage lasts, but we could start missing out on episodes of shows in the second half of this year, while movie release schedules could also be impacted.
That's high drama. Sean, up next is the Fear and Greed Daily interview. You're speaking with Christy Nicholas, Managing Director of Mum Power.
Yes, Mum Power is all about marketing to mums. No surprises there. Great chat to Christy about the best way to do it.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Do we have a Mia or similar today, Sean?
Well, it's something similar, but I must tell you about. I got a message from a gentleman called Sean Turnell, who's a friend of mine. Now, you might remember Sean. Sean was detained unlawfully in Myanmar for about 21 months and only came out late last year. And he and I worked at the Reserve Bank together and have been friends for a long time. Anyway, he's a listener of Fear and Greed. And he sent me this great message. He says, "Sean, on Fear and Greed this morning, I heard you talking about the coronation and can't resist sending this as a consequence. Took place a week ago at Windsor Castle." And it's a picture of King Charles III. On his left is Sean, and on his right is Ha, which is Sean's wife. The three of them looking very, very regal. Apparently, King Charles followed Sean's case, and Sean is an incredibly humble individual. And his last sentence, "Forgive the big noting, but for a boy from the western suburbs." That's my favourite text of the year, just about.
I love that for so many reasons. I mean, the fact that it is Sean Turnell who went through such an ordeal in Myanmar, and the fact that he's home safe, and now that he is kind of meeting with the king, you know what that also means? That we have reduced our degrees of separation between fear and greed and the king down to 1 or 2 degrees now.
I wonder whether Sean said to the king, "Hey, you should be listening to Fear and Greed."
God, and then imagine today's episode was the first one that he listened to. Oh, dear Lord. God, the rubbish we've gone on with today, Sean. Chicken schnitzels.
Yeah, chicken snitties.
All right. Anyway, time to wrap this up. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 3rd of May, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson. And that was Fear and Greed. Have a great day.